Good morning, traders. Welcome to BCR's Daily Market Insights. We're seeing a weaker US dollar, volatile oil prices, and gold testing record highs, while the Australian dollar remains resilient. Let's dive right into the fundamentals and technicals driving these key assets today. The DXY initially surged following stronger than expected inflation data, but later softened after Powell's testimony. Powell emphasized a data driven approach, lowering expectations for a March rate cut. Despite rising US 10 year bond yields, the US dollar struggled to maintain momentum. Technically, the US dollar index has broken below the 108 level, with RSI falling below the 50 level, a sign of a declining momentum. The MACD histogram is turning negative, confirming bearish pressure. If the index remains below 108, the next support levels to watch are 107.69 and 107.40, while resistance sits at 109. Oil prices dropped to $71 per barrel after the API reported a significant inventory build, breaking a three-day rally. However, ongoing Middle East tensions and the US sanctions on Russian and Iranian oil continue to provide upside risks. From a technical standpoint, WTI remains in an uptrend with a key resistance level at 73.74 and 74.52. If supply tightens further, oil could extend its rally. However, any signs of demand weakness or economic slowdowns could pressure prices lower, with 70.50 and $70 acting as immediate support. The Australian dollar dropped to 62.35, but rebounded to the 62.80 level amid broader US dollar weakness. Despite Trump's tariff increases and Powell's cautious stance on rate cuts, the Australian dollar remains supported as market participants factor in potential RBA policy shifts. Technically, the Australian dollar is holding above key moving averages, signaling a short-term strength. Resistance sits at 63.30 with further upside possible towards 63.98. On the downside, key support levels are 62.23 and 62 cents, which could act as a base if selling pressure resumes. Lastly, let's have a look at gold. Gold briefly touched a record high of 29.42 before pulling back due to profit taking. Despite this, investor sentiment remains bullish, driven by trade war concerns and safe haven demand. Rising bond yields usually weigh on gold, but the weaker US dollar offset some of that impact. Technically, gold remains in an uptrend with a key resistance level at 29.50 and a long-term target of $3,000. However, the RSI indicates overbought conditions, suggesting a possible pullback. Immediate support sits at 28.86, 28.82, followed by 28.50. Well, that wraps up today's daily market analysis. We're keeping a close eye on the US dollar's movements, crude oil supply trends, gold price action, and the Australian dollar resilience. Stay sharp, manage your risk, and I'll see you in the markets. Happy trading.